Candlestick signals and patterns provide the candlestick investor with a much more clear and highly accurate assessment of what the market's doing. Over the past couple of weeks, we've seen a big morning star signal form in the Dow, right at the bottom of the trend channel. Last week, we saw a bullish engulfing signal, which also gave an indication there might be supporting at the bottom of the trend channel. But we had the resistance level of the T-line and the 50-day moving average. However, knowing that the bullish doji sandwich tells you that these resistance levels aren't acting as resistance anymore, it also tells us there's probably more upside, which now makes the top of the trend channel the likely target. This at least allows investors to see how much time they have in the next uptrend before we run into a resistance level. The NASDAQ also confirmed that strength by showing buy signals right smack dab off the 50-day moving average that had been acting as support in this uptrend, and a doji sandwich. And today they gapped the NASDAQ up above the previous day's open of Friday and went the opposite direction, setting up for a potential flutter kicker signal, which would still indicate very strong upside potential. Knowing what each pattern represents, like a big fry pan bottom as we in our recommendation of PGNX a couple weeks ago, today we took profits because candlesticks work just as well on a daily chart as they do on a 5-minute chart, 10-minute chart, or a monthly chart. So when we had huge profits in it, the rhetorical question is, well, there was no sell signal up here. How did we know it was time to take profits? Very simple. We knew how far away we are from the T-line. We have a very simple rule. The further away you move from the T-line, the higher the probability it's going to come back and test it. And knowing that we're that far away from the T-line on the daily chart, we can just flip to our 10-minute chart, and as soon as it started trading back down, either on a sell signal or trading back below the T-line, we could take profits, which meant we were getting most of our profits out of that trade. Candlestick signals is nothing more than the graphic depiction of what's going on in investor sentiment, and basically tells you what usually goes on in human reactions and allows you to take profits or get in at the appropriate time. That'll be it. We'll see you in the chat rooms.